the market dropped something like 40 some points. I went in and I bought that happily, and it was up the next day. It was up the full 40 plus another 15 points. So, this is the way you can kind of fine tune your purchasing, but you have to think a little differently than the rest of the herd if you don't want to step in what it leaves behind.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver dealer with Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized, private service from one of the oldest and best respected companies in the business. 30 years strong, A+ rated by the Better Business Bureau, 0 complaints, licensed and bonded, insured delivery or vault storage or IRAs, excellent prices, privacy and confidentiality, pay by check, money order, ACH or wire, satisfaction guaranteed. Call me directly at 419-819-9209 or my associate at 310-562-6400 or email us at kaiser@milesfranklin.com. Welcome back to Liberty and Finance. We have a returning guest. David Smith is a member of the Morgan Report at morganreport.com. He does a lot of their field investigations of mining operations and writes a lot of the reports on those mining enterprises. He's here with us again this Friday, January 8th, 2021. David, thank you for joining us again here on Liberty and Finance.
It's good to be back, Dunnigan. We have volatile markets as per usual.
Yep, the markets have been fairly volatile recently. We had a pretty comparatively quiet like November, December, but here in January we've seen a noticeable ride up and now a sudden response down in precious metals. We'd like you to talk to us a little bit about that in general, what that means and what it should, what kind of a response that a seasoned bullion stacker who's trying to reduce financial risk to their family and their future should take from that. But also then we'd like to, after that, talking about this example of volatility, we'd like to talk about some of your main things you're looking forward to in 2021, both in the metals markets, but also in the mining industry. So let's talk about the action of the metal prices first in the past couple of weeks, up and now down. What are you seeing, and what do you think that should mean to people who care a lot about their financial futures?
Well, it's easy for especially a new investor, but even for seasoned investors, it can be hard for them to keep the faith when they see these periodic knockdowns where silver is down a couple bucks and gold might be down 50 or 60 or $80. And if they think back, they might see that every time this happened, what happened later is that it recovered, and sometimes it took longer than others, but then we ended up with a resumption of the bull market. It was never really knocked for a loop. And like David Morgan likes to say, the market's bigger than all of us. And so if we listen to what it has to say, both on the up and the downside, we can keep from losing the faith, because he also says it'll do everything possible to shake off as many people as possible on the bull run. And there are probably people today that are losing faith and maybe selling their positions or putting off buying physical silver or whatever that maybe said a couple of days ago, gosh, if it drops a couple dollars, I'll buy. But then when it does, they get fearful. And the analogy that comes to mind, something that goes back a long ways for me and maybe for some of your listeners, but I think that the market participants that can sell these future shares on unlimited amounts and with very small margin, and they can move a lot of metal, paper metal, without having any financial problems because they have such margin. The rest of us don't dare do that. And so they knock things down out of nowhere, and we think something fundamental has changed. But the reality is we're still in a secular bull market. We're still in the early stage of the last big leg that is moving into the public recognition phase for the metals. And we believe we're going to see prices that are going to be higher than we've ever seen in our lifetime across the board eventually in the commodities sector, because we're trading at 80-year lows compared to other asset classes. And when you come out of something like that, if you can keep the faith and not get too carried away with margin and things like this, you can really make it worth your while to be involved. But what happens when the market gets hit like this, it's almost like a sucker punch. And I think a lot of us probably had that happen to us in school, where we were in grade school even. I can remember it in third grade, where somebody comes up to you and they you think they're your friend, and all of a sudden they hit you in the stomach and knock all the wind out of you. And the feeling, if you haven't thought about it or have a plan, is that you think you're helpless, and you bend over and you can't breathe, and your response is no response to them. Rather than getting away or attacking them, you think you're helpless, but you're not. But if you understand the dynamics of this and you understand that you can respond, then you look at it much differently. And for me personally, I've spent many years training in the martial arts, and my revered sensei of 33 years of instruction that I had with him, he passed away just a few weeks ago. So that's really been devastating for me. But when I was going through the Dan ranks, one of the things that he had us do was to come up with two or three situations that have happened in our life where we had a situation where we had to defend ourselves unexpectedly, and recreate that mentally, and then come up with a response system for it, a series of responses. And so I remembered this circumstance that I'd had happen in the third grade. And what I did was to train really hard for about 30 minutes so that I was really short of breath, and even include some running. And then I would imagine that I had been hit in the stomach, and I would just kind of suck my breath in like I'd been hit. And I would hold my breath for about 20 seconds. And what I found, I was able to keep responding very effectively without having to breathe in breath. And that panic went away because I realized I was not helpless. I had plenty of opportunity to respond and counterattack or whatever else I wanted to do, but I was not helpless. And I think if people in the market think about that analogy, they'll realize they're not helpless either. They have positions that they have presumably fully paid for. They have a plan they've been carrying out. A lot of people that you have as customers have been buying from you metals on a regular basis, every month or every few months, or when the price drops. And some of them have said, if the market drops by $2, I'm going to be a buyer today because I have some money. I look at this as an opportunity. And so they will act on that rather than thinking, oh, it may drop another $5. I guess I'll wait. And so that to me is helping people to be able to respond and to stay in the game.
That philosophy, it's interesting because when we talk with David Morgan, he often ends up in a rather philosophical bent in terms of getting us to think more long-term or big picture or at the dynamics that are below the surface level. So I really appreciate that you bring also that perspective of thoughtfulness to keep us in the game. Rick Rule does that as well. He talks about making sure that we are prepared to take advantage of opportunities rather than be taken advantage of. And I think that's in line with what you're talking about. So we wanted to also to get a chance for you to tell us what are the major things that you've been watching in terms of factors that are both affecting the metals markets, but also you think that are something we should be looking forward to in 2021 in the mining industry. So maybe we could take those one at a time. What your major factors are that you're looking for in the metals in 2021?
Well, I'm looking for a continued decline in head grade production of silver and gold, especially silver, because it's declined over 50% over the last 10 years. They're mining twice as much ore to get 50% less silver. In addition, the new discoveries are not coming online like they used to, especially in gold and certainly in silver. There was only one primary silver operation that was put on last year. And so that's going to continue. Another factor, they've always said that silver is largely an industrial metal, but what it would really take to move it into a very vertical or much stronger trajectory upward would be in additional investment buying. Well, last year, investment buying went through the roof, and it's still going through the roof. So that factor, which I think market observers haven't fully comprehended yet, is a growing factor that is soaking up more and more silver to the point that it's, the premiums stay up. And when you have a day like we're seeing recently where the price drops, the paper price drops, but the buying increases and the premium gets to be high because it's hard for the sellers to find more silver. So I think that's going to continue. and it's going to be more of a constant feature as the price inevitably ratchets itself up after it gets back up off the floor from what it's been doing recently.
Before we move off this topic and start talking about mining more, and you've already scratched the surface, of mining. But anyway, I was just speaking with a client about an hour ago, and about that challenge that we all face when we want to do it. We want to be good custodians of our family's finances. We want to make wise decisions. We want to make prudent purchases or prudent when we're making investments, that sort of thing. Even acquiring something that real money like gold and silver, we want to do that as responsibly and economically as we can. We want to end up with the most ounces of metal that we can for the budget that we can afford. In doing that, the intention is all correct, but the strategy that seems to say, I will just wait for a really big smackdown, and then that I'll know is my buying opportunity, so I'm just going to stay on the sidelines until that happens, can be very problematic for people. My wife and I have experienced this, but it's even different in metals than it is back when we were just doing like stock investing, and because in stock investing you just worry about, will I catch the dip, or will I be able to get my order filled fast enough, or will I miss it, or that sort of thing. In metals, there's a whole other thing, as you mentioned, and this is what we saw in March of this year, is when silver got smacked down from roughly 20 to like 11.8 or something over one weekend. That was a paper price, but because of the increased volatility, the premiums didn't allow the physical price to move down because physical was not moving. The actual retail investment grade coins that were available were still selling in the 20s, and so that's one thing is that the physical investable product price doesn't necessarily follow that volatile paper price. But then secondly, we had people calling up in March and saying, okay, I'm ready to buy, and it's like, well, okay, there's a 8-week delay because we're just sold out and everybody else was getting sold out. So would there even be any available? So that whole strategy that starts out sounding so reasonable can actually be a fool's errand in the end, thinking that your overall strategy is when in that crisis moment I'll be able to then make my move and get. And that's what we've talked about on our preparedness channel, Reluctant Preppers, for 9 years here, is being 7 years early than 1 day late. So just your thoughts on that trade-off of people trying to have their major plan be that they're going to be able to seize that moment when it arrives rather than acquiring along the way.
I think you make a very important point there, and that's become more and more obvious and more frequent since the 2008 meltdown, where silver was selling on the paper price at like $9.50, but you couldn't find it anywhere for under $12, $13, $14. The same thing with gold. I remember platinum was like $250 difference between the paper price and where you could find it. And that's only going to become more and more pronounced as the supply becomes problematic. So when people were waiting this spring, like you mentioned in March, they go, well, if it ever hit $12, it's 18 or 19 now, I'm going to be a buyer. Well, it hit $12 for a short period of time, but the premium was $8 to $10 over the silver price. So they would have had to pay $20 to $22 if they could find the silver when the paper was selling at 12. So people need to remember this, and if they don't, they're going to be continually surprised. And the reality is that people like yourself that are sellers, if you're not sure where you're going to get a replacement to sell more silver, you're not going to want to give it away at a paper price. It's crazy. You're going to hold on to it, and the premiums are going to rise. And it's not because you're trying to gouge anybody. It's because you have to stay in business, and you have to be able to supply your customers. So this whole thing about the market, the silver is just not going to be there available, even if it's sitting there. People are not going to give it away because the sellers know that this paper price doesn't accord with the reality of what the demand dictates.
If we could turn our attention to what you're looking at in the mining space, you mentioned briefly about a major trend that's been going on for a decade with reduced quality of grades of ore that the mines are having to process. There are many other trends in place, energy costs, jurisdictional restrictions, all kinds of things. new extraction techniques or new exploration and discovery methods. What are the main themes or technologies or opportunities that you're looking at in 2021?
Well, I think this idea of when we have spikes in demand, that it's hard for primary silver producers to meet that. Around 70% of all silver produced comes from large base metal projects, copper, zinc, and lead. And, these big projects themselves, a lot of them are nearing the end of their mine life. And so the big projects aren't being rediscovered. And so that puts even more pressure on the primary silver producers, of which there are less than 24 worldwide. And a lot of these are small producers. They're not talking 20 million ounces. We're talking 1 million or 2 million ounces of production a year. So when you have a demand spike for whatever reason and the supply is in question, they can't ramp up. They can't suddenly produce another 1 million ounces. That just doesn't happen. And so this becomes more and more untenable for people to find the metal. And like you say, some of them have to wait 6 or 8 weeks, or they simply say, we can't get it to you. So this is a trend that's going to continue. And I think the bull run, silver and gold have been making pretty interesting chart movements lately, where they're really showing that they're trying to break out to the upside through that resistance that's held since last August. Also, the ETF bills, these are important to see. Gold and silver are flowing into the exchange-traded funds, and when people buy more shares of those funds, the fund masters have to go buy more physical to back it up. So they're now competing with investment users in the physical space that go into their local dealer. And of course, what we talked about at the beginning, the increase in precious metals investment by retail investors. So, and also big money, larger money is moving into the space. So all these trends augur for an explosive moves, and they're going to be less predictable. So if people think that they're going to get a runway of time where it becomes obvious, oh, yes, if I do this over the next few months, I'll be fine. No, these things are going to come out of nowhere. They're going to be outliers, and you're going to see big jumps of several dollars an ounce, and then you're going to go, well, now what? And that's not a good plan.
It's interesting because one of the things you mentioned that your sensei told you about was working through problematic situations you had directly experienced in your life and coming up with a strategy and strengthening yourself so that you'd be better prepared. I'm thinking psychologically and emotionally that could even heal some of those wounds of those pasts, because you realize now I'm a different person, now I'm a stronger person. That same exercise that you just described can be done as a thought experiment about the future. What if this happens in the future? What will my response be? What is my plan if this occurs? What is my plan if that occurs? And that's another thing we've done for years on our preparedness channel, is encourage people and practice ourselves to think through scenarios of what will I do if this occurs? What will I do if that occurs? And as you're mentioning, if people really are give the forethought to that and think, let's just say I wake up one morning and silver has jumped by 10%, 20%, 30%, or gold has, and the next day it's another 10% move or something. Will I have the fortitude to jump in at that point, or will I wish I already had back when it was boring? Or what will my response be? Will I say, nope, that's it, I have got what I need, I'm good enough? It's asking ourselves how we will respond in different situations can help to inform from our future perspective our current self on how we should maybe conduct ourselves now to be prepared for that.
Absolutely. You bring out an extremely important point of not only thinking about how will I respond if this happens, but how did I respond in the past when we had a $5 silver knockdown, and I'm still here and I'm still collecting silver. So did I respond the best way that I could then? And if I didn't, what can I do now that would make me better able to respond? And you become a more skillful accumulator and a more skillful survivor. And it's learning from those mistakes or learning from the things that you did right and then applying them and having the courage to apply them. It's empowering. It helps you to establish quietude when other people are running around in panic, and it helps you to respond effectively. So the old saying, it's not so much what happens to you or how you get hit, it's how you respond. Do you freeze like people did on the Titanic and walk around and not look for a lifeboat or think, well, it can't sink the ship, or do you come up with a plan? What can I do now that will give me a better opportunity for me and my family to survive this, to sidestep it, to be a better participant than if I don't, and not freezing and going into a panic and thinking all is lost is not the way to deal with it in real life. Almost anything you can come up with, that's not a good plan.
So one last chance, if we could get, as you look forward to what you're going to be focused on as the greatest opportunities in 2021 that you currently are aware of that have really got your attention, got your eyes, anything in particular that stands out that you're thinking, man, I've really got my eyes on in the mining space, or something that you think is a promising opportunity you're hoping to keep a close eyes on in 2021?
I think in the mining sector, I think there are some specific companies that I'm watching that I think either have underperformed, or even if they're performing according to expectations. If we see the kind of rises in silver, for example, that's being predicted, which is entirely possible, hitting $40 an ounce this year, maybe even 50. Do you realize what that's going to do to the profitability of a silver miner that's already making good money? Their costs for doing that aren't going to go up hardly at all, but their profit is going to go through the roof. And so I look at the companies where they've done the hard spade work of becoming more profitable, of selling off assets that didn't work so well for them, of acquiring good assets at lower prices, and they're going to be ready to rock and roll. In fact, they're already doing it. They're making good profits now. So I feel that that's really exciting, and that knock-on effect of a higher physical silver price is going to translate directly to the bottom line of the good silver and gold producers. So I'm very excited about that. And when I get a chance like today, where I might have a chance to buy something that I wanted at a much better price than I thought I'd get, I'm there if I've got the money.
You know, that really makes me remember when Rick Rule has talked here about, he said people who, and Andy Schechtman has talked about the misdirection of price activity. If you only focus on price activity, your emotions can just buffet you about all over the place. And Rick Rule talks about that people will look at recent price action and assume, well, tomorrow's going to look like today, so that kind of thing. He said, no, if you understand the value, as you said, if you already wanted to buy something because you had knowledge of the intrinsic value of it, either a mining operation, a company, you know how it's well, or you've looked at the books, or you trusted some analyst who has looked at the books and looked at the operation and says this is a valuable company, an enterprise, or the product themselves, the metals themselves. If you really have that eye for value and you understand the value, then when the price gets knocked down, you see it as an opportunity, not as a, oh dear, oh no, something bad just happened.
Right. And it's about the difference between value and price. And I can give you an example that happened to me just last week. And I have found that this is almost a guaranteed occurrence. If you have a quality company that announces that they have had another placement, or they're putting out more shares to take care of future operating expenses, or to buy another project, or they've made an acquisition that's going to cost some shares and some dollars, the market it knocks them down. It doesn't matter if they're the best in the business. And so you go back and you've either got that stock or you've been looking at it, and ask yourself, is there any reason why this is less valuable to me than it was yesterday? If it's still a good company and there's nothing wrong with what they're doing, I want to be a buyer. So I was watching a uranium company that I hold that I wanted more of, and it's had quite a run lately. So I wanted to buy it into weakness if I could, but it was kind of hanging in there. So they announced, I think it was about a $30 million deal where they were going to, put out some more shares to expand. The market dropped something like 40 some points. I went in and I bought that happily, and it was up the next day. It was up the full 40 plus another 15 points. So, this is the way you can kind of fine tune your purchasing, but you have to think a little differently than the rest of the herd if you don't want to step in what it leaves behind.
That's a word picture for sure. Well, David, if people want to follow your work, where should they get plugged in?
Well, I'm a contributor every month to the Morgan Report. I do a monthly essay for Money Metals. I do by invitation, and I have an essay coming out in a couple of weeks for the Prospector News. Not paid for that, but I enjoy doing it to get information out. So I have 4 or 5 essays a year there. I do interviews like I do with you, and I enjoy the participating. And I eat my own cooking. I have most of my investable net worth involved in the resource sector because I believe it's going to give us the opportunity for life-changing wealth in just the next few years. It's already started doing that, and I think we're getting underway. It's going to be a very exciting ride. We're going to see more times like we have recently where the price goes down as well as up, but that trend is basically up. And if you're ready to participate when it goes against you and you haven't gone on margin or you haven't bought more than you should, you'll be able to respond effectively. And even if you get knocked down on the floor, you'll get back up again and you'll still be there. And I want to see as many of your listeners as possible at the winner's table in a few years when we're probably looking at 3-digit silver and gold that is several multiples higher per ounce than where it is today.
And folks, if you want to make sure you don't lose track of what we are publishing, all of our guests, all of the descriptions, all the links to resources that our guests mention are all in our free newsletter. So just go to libertyandfinance.com and over the left-hand column, put in your name and email address. We'll get you signed up for our free newsletter. It comes out 3 times a week, typically Monday, Wednesday, Friday, and it has all the information from all of our guests in there so you don't miss any of it. David Smith from themorganreport.com, thank you again for joining us here on Liberty and Finance.
It's a pleasure to be here. Talk to you later, Duncan.
This is Duncan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver dealer with Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized, private service from one of the oldest and best respected companies in the business. 30 years strong, A+ rated by the Better Business Bureau, 0 complaints, licensed and bonded, insured delivery or vault storage or IRAs, excellent prices, privacy and confidentiality, pay by check, money order, ACH or wire, satisfaction guaranteed. Call me directly at 419-819-9209 or my associate at 310-562-6400 or email us at kaiser@milesfranklin.com. If you've decided that now is the right time for you to protect your family's financial future by acquiring physical precious metals, gold and silver, I'm delighted to let you know that I have now become a licensed dealer's representative for Miles Franklin, one of the oldest and most trusted names in bullion dealerships. And we can provide you with physical delivery to your personal possession or to professional vault storage or precious metals IRAs. Just email me at libertyandfinance@protonmail.com, and please include your name and phone number in your email to libertyandfinance@protonmail.com. We'll get right back with you and find out how to best meet your needs so that you can either begin or increase your acquisition of physical precious metals now and protect your family's future starting today. To acquire gold and silver, just go to libertyandfinance.com. When the main site comes up, click on Bullion Sales. That's libertyandfinance.com. Bullion Sales. You'll see my name, Dunnigan Kaiser, my phone number, and my associate Kaiser Johnson, his phone number, our email, libertyandfinance@protonmail.com.